please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
10,720, 22 on the Nifty, and 150 up on the Sensex, 34,745.
Our analysts expect Nifty earnings growth at 21% year-on-year for the December quarter.
This financial year, our volumes will grow more than 10% compared to last year.
Don't intend to seek regulatory dispensation. I don't think that it will be a big deal for IDFC to actually fall back to 40%.
The market is off about 20-25 points from the day's high, 70 points still on the Nifty at 10,752.
Bank Nifty is ending at the high point, up about 310 points. The Sensex down up about 230 points, the Nifty up about 55, but Nifty at one point was 10,782, so there was a bit of a cool-off.
Well, Dalal Street continues to fly. Sensex and Nifty post record close yet again. Nifty touches 10,750 and the Sensex gains 250 points. Nifty Bank leads the up move.
We told you first, and now it's official. IDFC Bank will merge with Capital First at a fixed share swap ratio of 139 shares to 10. V. Vaidyanathan will be the CEO of the combined entity. He tells CNBC TV 18 that Capital First will will add to priority sector lending in the merged entity.
HDFC Bank has finalized plans to raise nearly 13,000 crore rupees, including a QIP of 1,900 crore rupees. The mortgage lender plans to infuse 8,500 crore rupees of these into HDFC Bank, while also eyeing investments in health insurance and stressed real estate.
A lower than estimated December wholesale price inflation at 3.58% helps the Bank Nifty up move. The index has hit a fresh all-time high led by ICICI Bank and HDFC Bank.
And finally, mid-caps underperform in today's trade to remain absolutely flat at the index level. Cement, chemical and fertilizer stocks, however, outperform. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Over the next 30 minutes or so, we will discuss the top 5 market headlines. Our experts will answer your stock-specific questions. The guests today on the show to do that are Deepan Mehta, he's member of BSE and NSE. On the technical side, on the charts, we have Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here on the show. Let's wrap up the day's action first up. Good start to the week. It has been a great start to the year. But the day, I guess, left a lot to be desired. 40-odd points off the highs, basically, on the Nifty.
Well, I think Nifty bulls will still be happy that, this is the 44th record high in the last 1 year, in the last 12 months that the Nifty has set at 0.5% higher. And much of it is also because there's the global gush. We saw the way Wall Street performed. Yes, that was only part of the reason, because Asian shares didn't quite live up to the Wall Street cheer. But what went for India, my sense is the November industrial output numbers. At 8.4%, that's a 25-month high. Even after you account for the terrible November 2016, that is the weak base because of demonetization, this is much better than what analysts in the street expected. So there is a growth expectation, and my sense is that, along with the lower than expected CPI number, wholesale price index number, really charged the corporate lending banks. Those were the guys who led us higher, the ICICI banks, and for good measure, HDFC Bank as well. Mid-cap stayed muted, I think, more in tune with the way the global indices have performed. But again, there were pockets of outperformance. So my sense is that the bulls will take this as, as the Monday round going to them rather than to the bears. And more importantly, however, on the Nifty Bank, while many people think it has broken the charts and is now on an upturn, I would still think it remains a prisoner to the third quarter earnings.
Oh, absolutely. Let's just quickly put out a couple of stocks, Lata, which I think
there's a lot to talk stock-wise because...
yes, and it's all banks. I mean, HDFC Bank, HDFC Limited, ICICI Bank, they should come up on the top of your screens. HDFC Limited really, I mean, blew out the light. 6.25%, was higher at one point, came off a little bit. ICICI Bank, and I'm not putting Axis Bank there, but Axis Bank also started to perform late in session. Cement stocks all look pretty good. Ambuja, Ultratech, Grasim. I mean, as a pack, they come up. All large cap cement stocks. And GAIL was under pressure, ONGC was under pressure, Coal India was under pressure again. I mean, it's all PSUs. Eicher was another name which was under pressure today as well. Big moves. I mean, you had Kaya, which basically demerged out of Marico. That was locked up 20% in trade. There was Prakash Industries, who we spoke with last week here on CNBC TV 18. That stock saw a really large move. GNFC was another one which saw a very large move. And then you had Muthoot Capital, Tribhuvan Das, PC Jewelers. I mean, it almost looks like some of these smaller jewelry names are doing a catch-up to what the big one, Titan, has been doing now for months on end. And of course, I mean, there's the IDFC Limited and Capital First stocks, which are on your screen. I mean,
I think largely saw profit taking.
Yeah, huge profit taking. I mean, on futures, Capital First was at 900 rupees. It lost almost 50 rupees by the time it closed. Lata.
Okay. Let's first get some thoughts on where the indices are headed before we come to our headline number 2. Mitesh, good evening to you. What would be the next Nifty trade be? We are kind of 30 points off highs as well on the Nifty.
Good evening, Lata. So I think, the Nifty, we were talking about targets of around 10,750, which were met today. We did have a sell-off, but overall trend remains on the upside. So as long as 10,680 is not being broken, maintain a positive stand. And I think maybe after a day of consolidation, and Nifty has been showing this pattern of making high and then consolidating. So maybe after a couple of days of consolidation, I think we should look at 10,900. The important trade here, or the more exciting trade here in the short term, could be the Bank Nifty. In fact, we've been highlighting that the Bank Nifty should now catch up for its underperformance, and getting past 25,900 and closing about 25,950 is definitely a positive. So keeping a stop below 25,850, I think Bank Nifty should be a fresh long trade at current levels, and 26,400, 450 could be a target.
Okay, well, just a word on this to you, Deepan. Is the Bank Nifty Bank breakout significant? Or do you think it will remain a prisoner to earnings? I ask you because after market hours, we got the Federal Bank numbers, which showed a 10% rise in NPAs in that bank. We haven't as yet analyzed all the numbers, and the market obviously didn't know it during market hours. But there remains the danger of, there remains this danger to the Nifty Bank rally, earnings.
Yeah, absolutely, you're right in your observation, and would just like to add that banks are where a lot of investors are overweight in. Earlier it was the private sector banks, and then, after the recapitalization plans, we have seen even the PSU banks come into focus on investment as well as trader list. So I would say that definitely the Bank Nifty is going to be very closely linked to what news flow comes out from the banks, not just the earnings, but the qualitative factors like how the NPAs have moved, and what the outlook is for these banks, how they see the credit growth, how they see the NPA cycle, project takeoffs, and many other qualitative and quantitative aspects will be analyzed, and not just the bare numbers which the company discloses. Management commentary will be extremely important, and that will set the tempo and the sentiment in the bank stocks. But one thing that leaves me a bit worried about the sector is the kind of overweight position that a lot of investors are there. And any sign of disappointment, may be a trigger to sell. And we saw that in IndusInd Bank, where just a marginal decline in the net interest income growth rate and the marginal increase in the NPA resulted in the stock correcting by 2% on the day the numbers were announced. So there is scope for disappointment if the numbers and the management commentary do not pan out as the street has been expecting.
Okay, so that sets us up nicely for other stories, and this is our second headline. We told you first, and now it's official. IDFC Bank will merge with Capital First at a fixed share swap ratio of 139:10. V. Vaidyanathan will be the CEO of the new combined entity, and he told CNBC TV 18 that Capital First will add to priority sector lending in the merged entity. Lata, I heard you chatting with you and Nisha talking to Vaidyanathan and Rajiv Lal, and to a specific question about expectations and what the bank can do, he said, well, for the short-term players, I don't have any message, but if you're willing to hold it for the next 3 years, this could be a great deal.
Okay, so for the short-term worries first. IDFC in the combined entity will have 38%. The rules require it should have 40%. So the first key takeaway is IDFC will have to buy shares from the market, and that's about a 700 crore blow for IDFC. That share fell. IDFC, I mean the holding company. The second takeaway, will Warburg be able to retain 10.24% in the combined entity? Definitely not. RBI rules allow only 5%. With permission, 5 to 10%. So Warburg will have to sell out maybe 0.3, maybe 5.3%. We don't know. But more likely, they will be given time to sell off a larger chunk. That's the second takeaway. The third takeaway is that CRR, SLR requirements, cash reserve ratio on a larger book, including the Capital First book, will mean 6,000 crore of expense. 2,000 crores, Rajiv Lal says he already has by way of excess exposure to government securities, SLR. Remaining 4,000 crore, IDFC Bank will have to raise. That's a drain on margins, and that explains why the short term is not good, because they have to raise that money. A fourth takeaway, the priority sector is not going to be a problem because Vaidya said that 45% of Capital First's loan book straight away qualifies as priority sector. So that will be a relief for the merged entity, because it may not have to hunt priority sector for some time now, for a year or two. And finally, all those important points that you raise. Current and savings account, already that low-cost deposit is 8% of IDFC Bank. With Capital First coming in, it will fall to 3%. Cost of money of IDFC Bank, if it is X, with adding Capital First money, it will be X plus 120 basis points. So cost of money will eventually go down. That is Vaidya's point, really. At the moment, all the ratios will get worse. Every branch you set up, and together they have 195 branches. It requires a lot more in terms of footprint, and every branch is an expense. Yeah. So yes, it is not going to be, ROE together, I don't even know if they will be able to do double digit for a few years. At the moment they are double digit, but Capital First is even more than double digits. But it will take, I guess, three years, as Vaidya says, for it to get back to that number.
Absolutely. Let's actually hear out, both the key players in this transaction. We spoke with Rajiv Lal and V. Vaidyanathan. Let's hear them out.
The bank's incremental funding cost is about 120 basis points lower than Capital First standalone. So that's as of today. So there's some immediate financial synergy, which will only get accentuated over time. As Capital First high-cost fixed-rate liabilities drop off, and same with IDFC Bank. So again, to reinforce what Vaidyanathan is saying, that in 24 to 36 months, without actually doing anything, just by the evolution of our liabilities structure today, you will see immediate improvement at that point in our margins.
If we got to open branches, we got to do it. If it costs expenses, got to do it. And we should focus on what we can get out of those branches, how we can cross-sell to our customers, and how finally we can improve the value proposition for our customers in a composite way. If we achieve that, value will come. Investors will reap the rewards. We will add to the priority sector, because we are in excess of 40% is our priority sector. So in fact, our priority sector drag to the process is zero. In fact, we are a contributor of priority sector to this contribution.
How much? By how much?
We are excess of about 45 to 45% of our book is priority sector.
Those were the strengths and weaknesses, and we have a caller on that topic. Subrato C is calling us from West Bengal with a question on Capital First. Go ahead, Subrato, your question.
Yeah, I'm holding Capital First of 100 quantity at the rate 442 last 1.5 years. So my question is, after this merger announcement, although I'm a medium to long-term investor, should I hold or sell the stock, considering that it will be merged with the IDFC Bank? So can you please give me an answer on that?
Okay. Well, I think, Deepan, I would have asked you that anyway if Mr. Subrato had not asked. He's sitting on a lot of money. Mr. Subrato, what should he do?
No, I think you should remain invested. The exchange ratio is very fair for Capital First investors. And clearly it's a win-win situation for both entities. IDFC Bank gets a retail franchise, and Capital First gets a banking license. They benefit from low-cost deposits and therefore improvement in net interest margin. And most importantly, I think Mr. Vaidyanathan takes over the combined entity, and he has a fabulous track record in terms of building retail and SME lending institutions, which is perhaps the most profitable segment in the banking industry at this point of time. And they have grown the book, in a very safe and solid manner without compromising on the quality of the assets. So those ethos will come to the combined entity as well. And along with that, we are seeing naturally some pickup taking place in project finance, corporate finance. So IDFC Bank also should benefit from those trends. So I think it's a merger with the right timing, the right ratio, and the right fit over there. So even the combined entity, of course, there may be some initial teething troubles and you may have a few quarters which may be a bit disappointing. But if you look beyond a year or 2 years or so, I think this is one of the fastest growing banks and one of the most highly valuable in terms of valuation entity in the BFSI space. So I would say remain invested for at least an extended period of time.
All right, we will move on to the third headline of the day. HDFC has finalized its plan to raise nearly 13,000 crore rupees, including a QIP of 1,900 crores in the near future. The mortgage lender plans to infuse 8,500 crore rupees into HDFC Bank while also eyeing investments in the health, insurance and stressed real estate space. Real estate asset space. Abhishek Kothari is here with more details on the fundraising plans and the potential use of the cash. Abhishek.
HDFC Limited is looking to raise about 11,100 crores via preferential allotment to investors. They also have a board approval to raise about 1,900 crores via QIP. So overall, they are looking to raise 13,000 crore from the market in FY18 itself. Let's look at the detailed capital raising plans of HDFC Limited in the next 12 to 15 months. So total amount that they are looking to raise is about 18,384 crore. Out of that, from preferential allotment, they'll raise about 11,100 crore via QIP of about 1,900 crores and via warrant conversion in October 2018 of about 5,400 odd crores. What this does an impact on the equity dilution. Overall, the dilution is seen at 6.92% based on the current equity base of HDFC Limited. So via preferential allotment, it is 4%. Via QIP, it's about 0.6%, and via warrant conversion, it will be about 2.3%. So this fundraising that they are doing currently leads to a equity dilution of 4%, while the book value can increase by 19%. But major part of this fundraising will go into participating in HDFC Bank's QIP. So X of HDFC Bank's QIP, the book value will increase by 1.5%. And not to forget that warrant conversion in October 2018 will lead to additional flow into the net worth and therefore increase the book value. What are the objectives of raising the funds of about 18,300 odd crores? HDFC Limited will participate in the HDFC Bank's QIP to the tune of 8,500 crores. They are also exploring inorganic opportunities in the health insurance sector. Not to forget that they are also exploring opportunities in the acquisition and resolution of stress assets in the real estate sector. Back to you.
Okay, well, a giant raises 11,000 or 13,000 crores. The market won't take it lying down. It will move up 6%. And Saibal is calling us from Kolkata with a question on the same share, HDFC Limited. Saibalji, go ahead. What is your question?
Sir, I'm holding HDFC Bank Limited shares since 2011. My procurement price is 384. I'm holding total number of shares is 4,000. That I got as a part of my stock option from the company.
Wow.
So my question is, since the price is already highly valued, I mean, it is almost today is 1893. Is it wise to carry the shares or book the profit and stay invested?
Okay. Well, I can't see why you should book profit now, but I think Deepan is better placed to tell you. Deepan?
Yeah, I mean, absolutely. More than the salary, I think the stock options have really created the wealth for the investor. And this is the thing about HDFC Bank. They've been huge value creators for the common man, their employees, as well as a whole host of minority shareholders. And still, even at these kind of high levels of base, which we are seeing in both the organizations, they are still growing at decent growth rates, at least as far as the industry growth rates they are maintaining. And going forward also, I do expect that HDFC will remain in a secular growth mode, which it has been. And now that the prospects for low-cost housing, the prospects for lending against properties, those are looking up, and real estate also should start picking up maybe a year or so down the line. I think HDFC may be able to grow even faster than what it has been able to grow over the past 2-3 years or so. So although we have to compromise a little bit on the valuation, I think still it makes a good investment case, and the said investor should continue to remain invested for a long period of time. This QIP, I think, is just a small dilution. I don't think it moves the needle far too much. But I think it's a good that they're maintaining the stake in HDFC Bank. I think that shows confidence in their subsidiary, in their associate bank.
Okay. So don't sell is the advice to you when you've got the shares at 15 lakh and you are now sitting on 75 lakh and there's only a chance of it getting better. Don't sell.
It's an important decision for him. 60 lakhs in profits, right? I mean,
yes,
basically.
Yes. Yeah, no, it's a valid question.
Yeah. I think, as Charlie Munger said, I think it's attributed to him, the quote. He said one of the most important things about compounding your money is not to interrupt the process. I mean, and I think he's compounded it over the years.
Absolutely. We'll take a break. Coming back with more.
Welcome back. You're with us here on Markets Today Talk Back. Deepan Mehta, Mitesh Thakkar are with us. They've been answering your questions. Straight to the fourth headline of the day. It's not just the benchmark indices. The Bank Nifty also hit a fresh all-time high led by ICICI Bank and HDFC Bank. A lower than expected December WPI came in at 3.58%. It helped extend the Nifty Bank's rally, which was already ongoing when it actually came. We have a question now. Twitter user Lalit has got 100 shares of HDFC Bank, which he's bought at 860 rupees. He can hold the stock for 3 years. He would like some advice what he should be doing. Basically, his question is whether he should continue to hold or do something right now.
Okay.
So, Mitesh, what would you tell him?
Yeah, so I think my current advice would be to hold. I think the stock has made a fresh high today, and this should see the stock do extremely well. The near-term targets would be roughly about 2,050 to about 2,100, but I do eventually expect, because the longer-term charts also remain positive, I do eventually expect the stock to do much better over the course of 3 years. But it's difficult to keep giving targets on the stocks which are making new highs. So for the timing, it remains a hold. There's nothing to worry about, and 2,100 is the near-term target, as I said. And for 3 years, somebody, if he has that target, I think you will see many more higher highs and higher lows here.
Okay. Well, we're running out of time, so I won't go to Deepan and only take you to headline number 5, the last headline of the day. Mid-caps underperformed in today's trade to close absolutely flat at an index level, but there were outperformers, and these included cement stocks, chemicals and fertilizer stocks. On that issue, a tweet which has come from K. Nath. He wants to know if he can buy Madras Fertilizers at the current level for a 6-month period. Mitesh, you even track it?
See, Madras Fertilizers, I've not been tracking it, but if I was to look at an immediate chart, if I was to do an immediate chart check, I think again this is one of the stock which was doing a range of about 30 to roughly about 7, and this range lasted from 2003 to about 2017. So 14-year range is broken out. I think the stock should still double from here easily. So I think just clearly hold the stock. I think 100 rupees should be the logical target, maybe beyond that.
Okay, well, on that euphoric note, Mitesh, Deepan, we are out of time. Thank you very much for joining us with your advice to our viewers. And with that, we wrap up this edition of Markets Today.